Good morning and welcome to Stock Market Today for Tuesday, April 16th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. You can sign up for a free email to follow along with this show, as well as get daily stock ideas for you to consider in your inbox every trading day before the market opens. Special thanks to stockcharts.com for hosting this show every day, as well as See It Market for publishing our work every day. So U.S. equities were down in Monday's trading, but finished off the worst levels of the day. Treasuries were mostly stronger after 2 days of weakness. The dollar was little changed against the yen and euro, though a bit weaker on the sterling cross. Gold was down 30 basis points and oil was lower. WTI crude down about 80 basis points. Your outperforming sectors yesterday: consumer staples, healthcare, consumer discretionary, comm services. Underperformers: financials, REITs, energy, and industrials. And as we get to the desk this morning, S&P futures are up 30 basis points after finishing, as we said, slightly lower in an uneventful day on Monday. Asian markets were mostly higher overnight. China, the big standout, up nearly 2.5%. European markets are mixed. Treasuries are unchanged across the curve. Dollar is slightly weaker against the yen, slightly stronger versus the euro. Gold is down 40 basis points. And WTI crude is trading roughly flat. And we can really see here just a ho-hum session yesterday. Spinning our wheels, tried to break it down, actually took it below Friday's lows, but the market rallied back. So stocks consolidate recent gains is how we'll frame that one up. Support is near 2850, then in the 2800 to 2815 zone. Resistance, we're in that zone. Resistance is in the 2900 to 2940 range. 2900 round number, 2940, those September highs. RSI remains in bullish ranges, solid uptrend since that big December oversold reading. RSI indicator has really been what's helping us stick to the bullish call there as it remains in bullish ranges, and Chaikin money flow is continuing to rebound. So the indicators support what we're seeing in price as far as I can see right now. Stock market is above, or the S&P 500 is above the rising 200-day moving averages. So all intents and purposes, the trend does remain up. Now, could we see a slight consolidation here as we trade into this resistance zone? Of course we could, especially with the RSI up here near 70. But we want to use any pauses or pullbacks to these key support levels to add bullish and very bullish stocks in leading parts of the market to the portfolio. That remains the strategy. That will continue to remain the strategy until the facts change. Our market in a minute now. Stocks move sideways in a lackluster session. They break a 3-day winning streak for the S&Ps. Financials give back gains following results from Goldman Sachs. Healthcare remains under relative pressure, largely due to the pharma and services stocks, especially the large cap names. Consumer discretionary moves to a bullish relative trend. We'll take a look at what that means. And futures, as I said, do point to a higher open here today. Now, the power bars for the major indices all remain bullish. 8-2 for the Dow, 8 bulls, 2 bears. S&P 500, slight downtick here, but 132 bulls to 43 bears. NASDAQ, 27-8 bulls to bears. NASDAQ finished higher on the day yesterday, ever so slightly. Small caps underperformed on the day, but still with a bullish ratio. 529 bullish or very bullish stocks, 291 bearish or very bearish stocks. Bonds see a rebound after a couple of days of selling. 10-year yield, as we discussed yesterday, I'm calling the trend, the move lately, counter trend in nature. Trend still remains lower. Yields have resistance at the 10-year mark and the 255 to 26 area for the 10-year yield, so keep an eye on that. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. Major indexes are mixed across the board. Our stock of the day today, Teledyne Tech, ticker symbol TDY. Comes to us from the Aerospace and Defense Industry Group. Stock closed at 252.71 yesterday, up 36 basis points, so a bit of an outperformer. Very bullish rating due to very strong price volume activity, very positive expert activity, strong earnings performance. Financial metrics are poor, but when we roll up the 20 factors, 5 in each of these 4 categories, we come out with that very bullish rating. So this stock actually when we analyze, is going to be very similar to what we looked at yesterday with Accenture. TDY has a very bullish rating, strong trend, strong industry group type of name we want to consider. Here's that very bullish rating. Stock's been an outperformer really for the majority of the past 12 months, and the intensity of that outperformance has picked up of late. Chaikin money flow predominantly bullish throughout 2019. Now, what we have here is a very overbought stock. Okay? We have it. That's fine. Couple ways to slice this one. Breakout traders who like to buy stocks that trade to new 52-week highs, and it's a momentum strategy and one that warrants some attention. For you, the line in the sand is $250. As long as the stock remains above $250, it's okay to be long the stock, especially if you're already there. For those that don't like to chase, would rather wait for a bit of a consolidation, what we'd be looking for is some sideways activity around this $250 mark to work off this overbought condition, which sets up a more compelling entry point for people who are not momentum oriented, who would rather wait for a bit of a consolidation. But regardless, your key support level is right around that $250 mark. If the stock remains above $250, it should continue to do well, whether it starts to consolidate before moving out or continuing to move higher. Obviously, that's hard to say, but $250 is your line in the sand. Let's be cognizant of the fact that earnings are set to be reported next Wednesday, April 24th. As of now, not 100% sure if that's confirmed, but just something to keep in mind as you're looking at ticker symbol TDY here. As I said, couple of ways to play it. For those of you who don't want to chase the stock, but potentially want to have exposure to a continuation, maybe you consider some call options or a bullish call spread. A lot of ways to skin the cat. There's more ways to do it than just buying the stock. Obviously, we try to work through all those details for you, but it is not inclusive. Now, our sector tracker, looking at the movement of the major sectors over the last 5 days, communication near the top of the list. Past few days, strength in Disney really helping that one out. Financial seeing a bit of a rebound following that print in JP Morgan, but Goldman Sachs' print yesterday kind of weighed on the group and took away some of that bullish sentiment. Consumer staples round out the top three. Utilities starting to look interesting. We're going to have a look at that chart a little bit later in the show. Tech, discretionary, and real estate, middle of the road. As we've said a number of times, we want to see tech do well. Energy starting to come under some pressure. This group is really trying my patience. We've been talking for a while about how downside relative momentum has been waning. Now, that does remain the case, but I've said that's not your all clear. We do want to wait for the trend to change. Still churning sideways. For those of you who received my note, you'll see the chart in there today, as Tuesday is relative strength day, and it won't get going to the upside on a relative basis. So it's too early to really get excited, and it's a little bit of a drag because oil's been doing so well. You would expect these energy stocks to be doing better on a relative basis. They're just not. Now, we don't trade what we want to happen. We trade what is happening. And right now, energy just continues to consolidate, but the trend does remain bearish. Healthcare under a lot of pressure on an absolute and relative basis. We'll take a look at that chart a little bit later in the show. And speaking of healthcare, our industry in focus today is biotech services, which over the past 6 months has been a roughly inline performer, slight beat by 21 basis points. However, that power bar ratio, which measures future potential, is very weak. 34 bearish or very bearish stocks for 7 bullish or very bullish stocks. Ranked number 20 of 21 subsectors, down 5 slots over the past week. Some of the names in that group that have very bearish ratings: Clovis Oncology, CLVS, Mirati, MRTX, and Intercept, ICPT. Now, we're going to look at Intercept, but I want you to keep Mirati in mind too. Mirati is on the verge of having a personality change. The rating is very bearish, and the outperformance is beginning to wane. So keep an eye on that one. But Intercept is one that's had a personality change. Personality change is when the rating goes bearish and the stock begins to underperform the market. So what do we have here? Intercept closed at 92.25, down 3% yesterday. Very bearish stock, weak trend, weak industry group. As always with these biotech stocks, be aware of what the potential catalysts are. What do they have coming down the pipeline? It's an extra step that you have to take when you're analyzing these names. But what do we have here? We have a very bearish stock that's just now beginning to underperform the market again. This is that personality change, rounding out of an overbought condition. Chaikin money flow more bearish than bullish of late. Below the declining long-term trend line after this gap down from 120. I think you could see downside potential here to support in the $80 area. Again, be aware of what's coming down the pipeline, potential catalysts that could move the stock hard in either direction. But right now, this is not the type of name that we would want to own. If you're looking at taking a bearish position, just be aware of what could move the stock. Check out the company's website. Check out the drugs that they have in development and any announcements that could move the stock hard one way or the other. Now, our trending names, yesterday's S&P 500 gainers and losers. Managed care stocks seeing a bit of a rebound. That helped Anthem rally by about 4%, UNH 3%. They do report earnings today. CVS had a bullish article in Barron, sent that stock higher by over 2.5%. Fortinet, no real news, just part of that strong software group, up 2.7%. Ulta announced the appointment of a new president, sending that stock higher by 2.64%. On the declining side, ADS caught a downgrade. They're selling part of their business. Couple of downgrades, actually. Stock down 9.3%. No real news to send. NKTR down 4.75%. EA, some cautions commentary in Barron's. Stock down nearly 4%. Goldman Sachs earnings disappointed the street, especially on the trading side of their business. That stock was down nearly 4%, 3.82%. Holly Frontier, no real news yesterday to send the stock lower by 3.5%. They did catch a downgrade today, so keep an eye on that one. Again, that's part of those energy names that just won't get going and continue to underperform the market. So just some names to keep in mind here as you're going through your process here this morning. Now let's talk about it. Consumer discretionary. It's relative strength day here at Chaikin Analytics. We look at all the sectors and how they're performing on a relative basis to get a sense of where the trends lie. And XLY relative to the SPY is breaking up and out of this consolidation. Obviously, a lot of that has to do with Amazon. It's a big weight within the group. But regardless, the ratio is above the rising 200-day moving average and is broken out of this consolidation. Move confirmed by momentum as the RSI has not become oversold during the consolidation and has now reached an overbought condition, which confirms the strength of the trend. And what's interesting to me is that XLY is breaking to all-time highs on an absolute basis as well. Remember, this is a risk-on type of group. We compare discretionary to staples and see which one is leading, which one is lagging to get a sense of risk appetite in the marketplace. Consumer discretionary is leading. Consumer staples are lagging. Healthcare weakness continues. Here's that XLV relative to the SPY. Broken support below the 200-day moving average just continues to bleed out. Now, the ratio is oversold. After a series of lower highs, it has hit an oversold level. So a counter trend rally can't be ruled out. I think you want to use that counter trend rally within the healthcare group, especially the pharma names and the services names that have been under the most pressure, to either lighten up positions or look to open bearish positions within this group. Now, it is near-term oversold, as I said, and we'll take a look at that in a little while and look on a relative basis, on an absolute basis, rather, starting to roll over as well. This group just needs more time to consolidate, build a base before it can begin to move higher. And this is just an example of how we don't remain dogmatic in our view. You've been hearing me talk for the past few weeks about weakness in healthcare. It was a group we loved throughout most of 2018, but now we get off the board. When the facts change, we change our mind. That we do not remain dogmatic in our views. Healthcare weakness does continue. Now, short-term sector trends are interesting. This chart shows the 14-period RSI on the x-axis across the bottom, as well as the percent deviation from the 20-day moving average. So it's very short-term in nature, but it gives you a sense of where sectors lie within their underlying trends, right? So we talked about discretionary. Well, discretionary, we could argue, is somewhat overbought within the context of its uptrend. Maybe we don't want to chase there. We want to give it some time to settle out, but the trend is bullish. We want to consider the group. Healthcare, oversold within the context of its downtrend. So maybe you don't want to press the bearish bets right now, but you want to use rallies to open bearish positions. Utilities looks interesting to me. I think as the XLU holds above the $57 mark, it does look compelling. So let's take a look at that one here. Here's XLU on an absolute basis, holding above support at $57. Remember the RSI that we looked at for the S&P 500? Same analysis applies. Holding above 50 leads me to believe that this consolidation is going to resolve itself to the upside, especially given my view that the path of least resistance for rates is lower. And on a relative basis, you can see XLU holding above support against the S&P 500. So Stabilization here above 57 and now beginning to move higher. Keep an eye on the utilities for a potential resumption up their uptrend. I will see you back here tomorrow. Have a great Tuesday, everyone.